Have you heard people say they're worried about losing some or even all of their old age security benefits because of the OAS Clawback? If so, you're not alone. Every year, thousands of Canadian seniors have questions about how the OAS Recovery Tax works, who it affects, and whether they need to do anything to prepare. The good news is that many retirees never have to pay the recovery tax at all. But if your income is increasing, or if you're planning to sell investments, withdraw money from your RRSP or RRIF, or continue working after retirement, it's important to understand the rules. Welcome back to Canada Pension Pro, your trusted source for clear and reliable information about CPP, OAS, GIS, and retirement benefits in Canada. Today, we're taking a closer look at the OAS Recovery Tax, often called the OAS Clawback. We'll explain what it is, who may be affected in 2026, how it's calculated, and what you should keep an eye on. We'll also clear up some common misconceptions so you can make informed decisions about your retirement income. Let's begin with the basics. The OAS Recovery Tax is not a separate bill that every senior receives. Instead, it's a repayment that may apply if your annual net income is above a government-set threshold. Old age security is funded through general tax revenue, and the government has designed the program so that higher income seniors gradually repay part or all of their OAS pension. For the current payment cycle based on 2025 income, the official recovery threshold begins at $93,454 of annual net income. If your income is above that amount, you may be required to repay 15% of the income that exceeds the threshold. The exact amount depends on your total income and your OAS payments. These thresholds are adjusted periodically, so it's always a good idea to check the latest figures on the Government of Canada website. One important point that often causes confusion is the timing. Your OAS payments from July 2026 through June 2027 are generally based on the income reported on your 2025 tax return. That means your income from last year can affect the OAS payments you receive this year. So, who is most likely to be affected? Many seniors receiving only CPP OAS and modest retirement savings remain below the recovery threshold and never pay the clawback. However, retirees with multiple sources of income are more likely to be affected. This can include people receiving workplace pensions, rental income, investment income, large RRIF withdrawals, or employment income after retirement. For example, imagine a retiree named David. David receives OAS and CPP, along with a workplace pension. During 2025, he also sold investments that generated a significant capital gain. As a result, his total net income rose above the recovery threshold. Even though this higher income happened only once, it could still reduce part of his OAS payments during the following payment period. Now consider another example. Susan retired a few years ago, but continues working part-time because she enjoys staying active. Her employment income, together with CPP, OAS, and investment earnings, pushes her total income above the threshold. She may also be required to repay part of her OAS pension. These examples show that the recovery tax is based on your overall annual income, not just your pension benefits. Another common misunderstanding is that crossing the threshold by even $1 means you'll lose your entire OAS pension. That's simply not true. The recovery tax is gradual. The repayment increases as income increases. Only very high-income seniors may eventually repay their entire OAS benefit. This gradual approach is important because it means many retirees only repay a portion of their OAS rather than losing it completely. It's also worth remembering that the OAS recovery tax is different from the Guaranteed Income Supplement, or GIS. GIS is designed for lower income seniors and has its own income rules and eligibility requirements. OAS and GIS are separate programs, and they should not be confused. Another question many viewers ask is whether the government has announced major changes to the OAS clawback for 2026. As of now, there has been no official announcement eliminating the recovery tax or making major structural changes to how it works. From time to time, you may see headlines, social media posts, or online discussions claiming that dramatic changes are coming. It's always best to verify those claims using official Government of Canada sources before assuming they're accurate. Retirement policies can evolve over time, especially through federal budgets or legislative changes, but it's important to distinguish between confirmed government decisions and public speculation. If any future reforms are officially announced, we'll cover them here on Canada Pension Pro. So, what practical steps can retirees take? First, review your expected annual income before the end of the tax year. If you're planning large RRIF withdrawals, selling investments, or receiving a significant one-time payment, it may be helpful to understand how those decisions could affect your taxable income. Second, keep accurate records of all income sources. Many retirees receive income from several different places, and it's easy to underestimate the total amount. Third, consider speaking with a qualified financial planner or tax professional if your retirement income is becoming more complex. They can explain how different sources of income interact and help you understand the tax implications based on your personal situation. Fourth, make sure you file your income tax return on time every year. Service Canada uses information from your tax return to determine your OAS recovery tax, if any. Filing accurately and on time helps avoid unnecessary delays or issues with your benefits. In my view, understanding the OAS recovery tax isn't about avoiding it at all costs. Instead, it's about knowing how the system works so there are no surprises. Many retirees are understandably concerned when they hear the word clawback, but for a large number of seniors, it never applies. And for those with higher incomes, understanding the rules can make retirement planning much easier. It's also important to remember that everyone's financial situation is different. Two retirees of the same age may receive very different OAS outcomes because their income sources are different. That's why comparing your benefits with friends or neighbors can sometimes create unnecessary confusion. As we look ahead, many retirees will continue watching for updates related to inflation, pension indexing, federal budgets, and retirement policy discussions. While future governments may propose changes to senior benefit programs, any official changes would be announced publicly and implemented through the proper legislative process. Until then, the existing OAS recovery tax rules remain in effect. Let's quickly recap today's key points. The OAS recovery tax applies only to seniors whose annual net income exceeds the official threshold. For the payment period beginning in July 2026, that calculation is generally based on your 2025 income tax return. The repayment rate is 15% of income above the threshold, and most seniors do not lose their entire OAS pension simply because they exceed the limit. There have been no official announcements eliminating or fundamentally changing the recovery tax for 2026, so it's important to rely on verified government information rather than online rumors. Understanding these rules can help you plan with confidence and avoid unexpected surprises during retirement. Thank you for spending part of your day with us here at Canada Pension Pro. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and turn on notifications so you never miss future updates on CPP, OAS, GIS, retirement benefits, and important government announcements affecting Canadian seniors. We'd also love to hear from you. Have you ever had questions about the OAS Recovery Tax, or has it affected your retirement planning? Share your thoughts and experiences in the comments below. Your questions may even inspire a future video. Thanks for watching, take care, and we'll see you in the next update on Canada Pension Pro.